Join us now, Tom Lee, head of research at Fundstrat Global Advisors, as well as a CNBC contributor. We can get to Bitcoin in a second. I want to talk just about the overall markets, Tom. And you think leading into Thanksgiving that slow sort of bleed, that slow bleed last week in the markets, you expect that not to be lasting, and multiple factors make you feel good about the next couple of weeks. And one of them, which plays into what we've been talking about all morning, and is the Treasury Secretary announcement will remove some uncertainty. You're following Polymarket to see who's in what. Besant was at 70, but then Musk tweeted about Lutnick, and his chances went up. What is it now?
They've both fallen to sub 40%. So part of it is Kevin Warsh has moved up and Mark Rowan has moved up.
We're using Polymarket to decide who's going to be the Treasury Secretary.
Stranger things have happened, right?
So you think we hear this week? And that'll remove uncertainty, or that's not the most important thing?
Well, I think as we remove uncertainty, so it may not be announced in the next week or so, I think that's like what I'd consider a clearing event. It takes away some uncertainty, and the Trump trade, I think, is still intact. The
Fed might not cut as quickly as possible, but you still said we're in a good place, dovish-wise.
That's right. Last week, markets were a little taken by surprise when Fed Chair Powell said he might, slow things down for December. But if you look at December 2025, a year from now, the number of implied cuts is still the same. So I think he's dovish. He's just moving some of the timing.
Another clearing event, Nvidia. You expect it to be a bullish clearing event?
I mean, most likely. I think markets get very hesitant in front of Nvidia's earnings. Really? And once that's behind us, we'll see demand is strong, and I think market breathes a sigh of relief.
And then we did get a little bit maybe bullish or over our skis, so we pulled back to a support level where you feel more comfortable.
That's right. I think most of the major indices have pulled back to what would be technically viewed by our technician Mark Newton as support. So the NASDAQ is on the support line. S&P did a 60% retrace of its recent rally, and small caps have held above their prior highs. These are all bullish support levels.
I was wondering whether things were getting overdone when the journal says a melt-up could be in the cards. And the Trump trade has already been going for a while. You think it's just getting started at this point? There's a lot probably for the markets to like, I guess, in terms of, he likes easy money, he likes low regulation, he likes lower taxes. There's a lot. It's more than a 2-week rally, maybe, in your view.
That's right. And I think maybe markets are course correcting because now with DOGE, the Department of Government Efficiency, there may be cuts to healthcare and industrials because of defense spending. So things that investors can focus on more deregulation of animal spirits, more like small caps and financials.
All right.
What about healthcare? You mentioned that in particular. It's not just DOGE that's going to be looking for more ways of efficiency. It's also changes afoot with RFK Jr. We're going to speak with Mark Bertolini about that in a minute. But how does the market kind of weigh that out?
Yeah, I think it's going to be a tough period for visibility for healthcare because, even recent comments about how much healthcare spending dominates advertising when you're not in the political cycle. And you're right, there's concerns about safety of certain vaccines and RFK being in charge of HHS. So I would just say there's clouds. There's still going to be opportunities probably in biotechs, but it's going to be challenging.
In a world where technology giants consistently battle for supremacy, Nvidia has recently stepped into the spotlight with news that's causing quite a stir in the market. Known as the titan of artificial intelligence and graphics processing units, Nvidia has once again exceeded market expectations with remarkable performance metrics. However, amid its impressive financial feats, there lurks a tale of new chip innovations that has investors simultaneously excited and anxious. Key players like CEO Jensen Huang have voiced optimism, but questions about the much-anticipated Blackwell chips loom large. Could Nvidia's surge be shadowed by whispers of potential overheating in its latest tech marvel? As the stock market buzzes with anticipation, Nvidia finds itself at a fascinating crossroads. Welcome back, everyone, to Investocracy.
Nvidia shares are slightly lower ahead of their earnings after the market today, but the stock has soared 191% this year on the AI boom. My next guest is overweight and says it remains his top pick. Joining me now is CJ Muse. He's a chip analyst at Cantor Fitzgerald. This is one of CJ. Walk me through your price target movements here and so forth. I mean, you've raised it to 175 now, yes, and it is your top pick.
That is correct. Within semi landscape, AI is still the king, and I would expect that Nvidia will lead that group higher. Tonight, I think 38 billion plus in terms of the revenue guide will be good enough. And then I think we're in a period of Goldilocks where we move to CES the beginning of the year, where Jensen's going to give a keynote. They then have earnings in February, where I look for a re-acceleration to their top line on a sequential basis. And then we go right into their GTC conference in March, where we're going to get the new Rubin and other product announcements. So I think for the next 4 months, Nvidia will lead semis higher.
So tell me again, what are you looking for on the guidance number, and what are you looking for in the actual results tonight?
Sure. So from a top line perspective, 34.5 billion for October, 38 billion plus for January is where the buy side is at, and I expect they'll do that. It sounds like they were able to free up some HBM capacity for Hopper, and it also sounds like Blackwell actual shipments should be as high as 5 to 6 billion for January. So when you put it all together, we should get a solid beat and raise by about $1.5 billion for each of the quarters. And then when we actually get full results for January, it wouldn't surprise me if the real number is closer to 40 to 41. So numbers are going to continue to move higher. That's where we'd be focused. The second area of focus, I would say, would be gross margins. Look for them to reiterate the low 70s. And then finally, the number that we want to hear, but we probably won't get tonight, would be support for a $225 billion data center number for 2025. We're going to have to wait on that. But that's really the big number that will drive the meaningful uplift for shares throughout 2025. But a little early to get that today. I think the one thing that the CEO, Jensen, will say is that they are sold out for the next 12 months. And that Blackwell will be the best cycle ever in the history of the company. And in our view, that's good enough.
Well, yeah, I mean, it's really incredible to talk about. The issue that I and many have had has never been with the valuation. For me, it's the market cap. It's at $4.5 trillion right now. So if you talk about the company, if the share price doubles without meaningful buybacks or anything like that, it's not going to be a $9 trillion company, is it?
Well, that's aggressive. With our price target, you're talking 4 trillion plus. Could it get there? I wouldn't underestimate Jensen and the gang there, but that is a big number for sure. I would say that unlike the telecom infrastructure boom to support internet, fundamentals have tracked the stock price. And so if AI becomes ubiquitous, we get to a landscape where AGI is real, then the number you threw out is not crazy.
Yeah.
But obviously, that's looking out, probably 2 to 3 years from now to underwrite that type of number.
Yeah, and I said $4.5 trillion for the market cap. It's only 3.5. So, maybe a doubling is totally achievable.
Standing on the shoulders of giants, Nvidia's recent financial achievements tell a story of relentless momentum and market confidence. The company reported an astounding $35.08 billion in revenue, marking a 94% increase compared to the previous year, with a significant portion hailing from its bustling data center business. This was further highlighted by its adjusted earnings per share of 81 cents, beating even the rosiest of analyst forecasts. The numbers were simply electrifying, almost as if Nvidia had plugged itself directly into Wall Street's nerve center. Behind the scenes, however, the landscape remains dynamic and complex. Taking a deeper dive, Nvidia's schizophrenia between inspiring growth metrics and cautious forecasts comes into sharper focus, particularly with the much-hyped Blackwell chips. CEO Jensen Huang, in a bid to extinguish the flames of skepticism, reassuringly coined, "Blackwell is in great shape." Yet humorous as it might sound, the market seems hotter about the chips overheating than their potential performance boosts. Talk about too hot to handle? Adding complexity, Nvidia announced the successful rollout of these advanced AI chips, fostering optimism that cannot be dismissed. But before we go any further, If you want to keep up with NVIDIA's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market. So click the follow button if you don't want to miss the newest market updates.
All right, jumping to another of the key market stories we're following today, that would be Nvidia. Shares trading slightly lower ahead of company's third quarter earnings report. That is expected after the bell this afternoon. Some investors eyeing the report as a potential catalyst to re-accelerate the market for the rest of the year following a fade in the big post-election rally in recent days. Our next guest has an overweight rating on Nvidia along with a $165 price target from $143 right now. Aaron Rakers is with Wells Fargo. He's a managing director there and a technology analyst. Aaron Rakers, not Aaron Rodgers. We welcome you. Glad to have you with us. Let's talk about Nvidia. You've got a $165 price target, which for Nvidia is a fairly modest move higher compared with what we've seen in the past. What are you trying to say by placing the price target at that rather more modest level compared with prior performance?
Yeah, look, we'll reevaluate that, as we get out of this earnings tonight. But, at the end of the day, our view on NVIDIA has been unchanged. It's a platform story. They're competing at a different level in this whole AI build out. We just came out of a supercomputing and AI conference yesterday where the excitement around Blackwell continues to be very strong, talking to the system vendors such as Dell and various others. And so, our thesis continues to be, in our opinion, well intact in NVIDIA and continues to be our top pick. I would point out that, if you look at the valuation, the stock is trading at less than a 30 multiple on calendar 26 numbers. It's historically over the last 3 years traded north of 40. So we don't think we're stretched from a valuation perspective. We think it's just all about, what's the pace to a $5 plus earnings power, and we continue to see the stock working higher.
You say that the Blackwell cycle is going to be the key focus here. Are there issues with the Blackwell chip, either their ability to get it into the system fast enough? There have been some talks about overheating. Explain that to me. What's going on?
Yeah, so our opinion is that, if you went back a month or two ago, there was a lot of discussion. Even they highlighted the fact that they had to do a remask on some of the Blackwell chips. I think some of these recent issues are more related to that. So it's more or less old news. Based on our discussions at the conference that we attended yesterday, we think Blackwell's progressing well. Even NVIDIA had noted that in a special address yesterday at this conference. Talking with Dell, which also announced that they've shipped the first Blackwell NVL72 platform to a CoreWeave over the weekend. We think we're going to see strong commentary on a forward basis on the Blackwell product cycle. And really, at the end of the day, I think what investors need to see and hear is, this durability of demand. Can the data center business for NVIDIA continue to grow sequentially as we move not just into this next quarter, but into fiscal 26, or rather calendar 25 for the company?
Aaron, what are you expecting for the guide? And where do you kind of fall when it comes to the results tonight, the gross margins? I mean, what is kind of most important for you?
Yeah, I mean, first and foremost is data center. So our preview going into this print was that we thought that they can do 30 billion plus of data center revenue. So that was, at the point in time, it was about $1 billion and a half or so higher than where consensus was. I should point out that consensus estimates have continued to move higher into this print. Actually, out-year numbers have moved up about 6 or 7% since the beginning of this month. So we've definitely seen some build of expectations higher into this print. I think on the margin discussion, we think the company can sustain a 70% plus gross margin. That will be a topic of discussion, but I think the bigger driver of the story continues to be this data center business, and emphasis is on Blackwell, but it's really a platform, right? They're selling networking, they're selling GPUs, they're selling their internal interconnect called NVLink. It's a true platform story. Even software monetization, we think, is still additive to the NVIDIA story.
How deep and how wide is NVIDIA's moat, as they say? In other words, how long can it maintain this primacy in this ecosystem?
Yeah, so our opinion, and we do cover AMD, is that AMD can participate in what is a very large market. So we are constructive on AMD, but at the end of the day, we think AMD is in a market where I think they can maybe be a high single-digit market share player. So we still think that durability of this competitive positioning strong. They're executing on what is now a yearly product cycle cadence. And we think through our forecast, through calendar 26 and even into 27 and beyond, NVIDIA is in the dominant driver's position in this whole AI build out. We will continue to watch a competitive landscape, not just AMD, but also internal silicon efforts. But we still very much believe NVIDIA, again, I keep saying it, is a platform story, which is very different than the competitors that they see.
I want to come back to where we sort of began, and that was the discussion of price target. We're 143 on the stock now. You have a price target of 165. And you said, well, we'll take a look at the end of the day here today, at based on what the numbers say and what they say, at whether we would change that. What would make you change that 165 and move it up? What would you be looking for specifically?
Yeah, I think it's a great question. So again, I think it's consistent, messaging. They're not going to guide beyond this current quarter, but, just the durability of demand on a sequential basis as we move into calendar 25. We're at the early innings, extremely early innings of this Blackwell product cycle. So that's one point. I've continued to believe that the software monetization side of this, is very supportive of what we think can be a mid 30, plus multiple on shares of NVIDIA. And then the final thing is, I think a lot of investors are trying to gauge the pace or the path to a $5 plus earnings power. So we've already penciled that out to calendar 26 to the extent that that starts to look more like a calendar 25 story. That would obviously be reflected in our updated valuation thought.
Yet NVIDIA's true strength lies beyond current deliveries, dominated by whipping high expectations for continued innovation and forward-looking strategies. With a robust cash reserve of $38.5 billion, NVIDIA is strategically equipped to fuel the AI arms race, placing itself prominently in the emerging global AI megatrend. And let's not forget that an overwhelming majority of the globe's AI models run on NVIDIA GPUs, stamping its market supremacy like a seasoned champ. At this juncture, NVIDIA faces its fair share of hurdles. Intense competition from rivals like AMD and Intel, as well as budding in-house solutions from tech giants, are set to test NVIDIA's mettle. Supply constraints augment the narrative, with demand consistently outstripping supply, indicating potential bottlenecks and opportunities alike. Moreover, macroeconomic pressures and geopolitical tensions add layers of complexity as NVIDIA navigates through these turbulent times. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Because you're the shareholder here, what are your expectations going in? Are you concerned in any way?
No, I'm excited, Scott. I mean, one of the things that's super interesting to me, this stock has had 7 straight triple plays, beat on the top and the bottom line and raising of the guidance. As Christina said, we're expecting 83% revenue growth year over year, a double on data centers, almost 100% growth year over year. So I think it is about the guide going forward. Again, the whispered number, as Christina mentioned, is 37 billion. I think they'll be above that number, which will be positive for the stock. And I think the market is really leaning into this because there has been obviously a little bit of digestion since the Trump blitz in the market. And I think going forward, this could be the next catalyst for the rest of the year. So I'm excited about the print. I think it'll be solid. And I think we'll see our 8th triple play for NVIDIA.
Yeah, let me just ask you about the whisper number, because, whenever you talk about a whisper number, it means that expectations are incredibly high, right? You're not just able to reach the number set by the street. You've got to reach an even higher level, and they've been able to do that, right? As you said, the triple play, you beat on earns, you beat on revs, you beat on guide. But it shows you that the bar for this company remains especially high. Let's not forget, these stocks as a group have stopped trading like a monolith. This stock has extended itself from the others, which I would say makes the bar even higher.
100%, Scott. I mean, what's another interesting note, if you remove them from the equal weight semiconductor index, obviously NVIDIA is up 190+%. That index is actually down 4%. You see ASML, AMD, Lam Research, obviously down, not trading as well, clearly. So, yes, the bar is very high for this stock going forward. But, when we've heard from all the hyperscalers throughout this year about the CapEx spent on AI compute, that's not slowing down. We continue to see that guide continue to raise in terms of spending, and all of those beltways lead back to Nvidia. So that's why I think this will be a strong quarter. And to Christina's point, I think the next quarter will be even stronger. So that's what we're excited about.
Wrapping up this odyssey, it's clear that Nvidia is not just charting the future of AI, but constructing its own empire. Despite facing challenges that could potentially temper its quarterly guidance short-term, the company's strategic operational prowess makes it a compelling case for any astute investor. With Nvidia firmly entrenched at the forefront of the AI revolution, the prospects for continued growth remain vibrant. The stock currently balances atop a delicate fulcrum between sky-high expectations and potential hurdles, engaging investors with its multifaceted prospects. Forecasts foresee Nvidia transforming the AI landscape, harnessing a burgeoning opportunity into a definitive affirmation of its prowess. One question remains: would you hitch a ride on Nvidia's ever-evolving journey toward a future seamlessly powered by AI? Engage and let us dissect the intricate canvas of Nvidia's promising future. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen.